JB Knowledge Podcast Network. On episode 54 of the Insurtech Geek Podcast, talking about reinventing life insurance for the modern consumer with Jamie Hale from Ladder. The Insurtech Geek Podcast, powered by JB Knowledge, is all about technology that's transforming and disrupting the insurance world. We'll be interviewing guests and doing deep dives into specific tech we see changing the industry. We're taking you on a journey through insurance tech, so enjoy the ride and geek out. Tell you what, Rob, it's this time of year in Texas, springtime, low 70s, beautiful blue skies, smells like low taxes in the air, you know, it's great. It's just fantastic over here. What a great state to live in. No more ice storms, no more power outages. It's almost like it's a distant memory, like it never happened, but it did happen. That's okay. We're going to talk about tech today, Rob. How you doing over there in San Antonio?
I'm doing good. Yeah, you're right. Beautiful spring weather as always. I've not seen any blue bonnets out yet, so that's kind of, I don't know if the freeze may have killed them off or not.
Freeze killed them.
Otherwise, springtime for sure.
Texans are, if you don't know this, we are obsessed with our wildflowers.
Oh, really?
Yeah, yes, we are absolutely obsessed with our wildflowers. This has been something that's been going on for a very long time. A long time ago, they started seeding wildflowers on all the state highways around Texas. And so every year in springtime, it's either a blue bonnet year or an Indian paintbrush year. It's either blue or red every year. And then there's a little sprigs of yellow that come up in between them. And everybody takes their kids out and they park very unsafely on the side of the highway. And they traipse their children into the middle of a field of blue bonnets and hope they don't run across any snakes. And then they sit their kids down in this bed of blue bonnets. And, you know, it's just, you're not a kid in Texas if your parents haven't hauled you out to a field of blue bonnets and taken a picture of you. And unfortunately, we all knew this was a possibility when that freeze came. It done killed the blue bonnets this year. There's, I mean, right now the hillside should be solid blue right now, and they're not. So a little tear, a little sad, but that's okay. With us, we have a Californian dude. Not really. He's not really Californian, but he lives in California.
I've been here 20 years, got 4 kids. I can tell all 4 seasons.
Yeah,
I think that has declares me a Californian.
Yeah, and your tax rate declares you a Californian. So, you know, he pays 13.3% of his income to the state of California. He can say he's a Californian. Soon to be 16%, I hear. So congratulations on that. And we're glad to have you on the show. We're going to talk about not tax rates, but technology. We're going to talk about tech.
All right.
We're just going to geek out on tech.
I love it.
And all things insurance. You got 2 giant insurance nerds on the show. We love talking about insurance and insurance tech. And
count me in, man. I'll join the nerd club.
Yeah, right. Absolutely. It's fun to talk about a massive industry and how it can change. Before we get started with that discussion, just remind you out there, if you're watching this video on Twitter or Facebook or Vimeo, you can subscribe to the Insurtech Geek Podcast by texting Geek Out to 66866 and make sure you never miss an episode. Just Geek Out to 66866. Back to Jamie Hale from Ladder. Jamie, good to have you on the show today.
Thanks. It's really great to be here.
Yeah, and glad things are improving in California and Texas and everywhere, right? It's amazing. Yeah. Vaccines work.
They do.
They do. Texas opens on Monday to everyone that wants a vaccine will be able to get one.
Oh, that's great.
That's
good. We're April 15th.
Okay. Yeah. We for us, it's Monday, and they've already done 8 million or so doses so far here in Texas out of our 26 million people. So the rates are down in the basement, and you know, all the regulations are gone. The state removed every reg that we had on it. So it almost feels a little bit like normal. My daughter made an interesting observation. She's 11. She's about to turn 11 next week, and we were on the trampoline. And we were thinking like a year ago, Jamie, we were just a week into the quarantine and we all thought it'd be a few weeks to bend the curve, right? Remember that 6 week bend the curve, flatten the curve, whatever it was. And of course that ended up being complete bull crap, right? Like it ended up being a year that we had to really modify everything. And we had so much fun though. staying home, my two daughters and I and my wife, we just had so much fun. We played Lego. You can see the Lego city we did. I learned how to play
Love it.
guitar. I trained for a triathlon. I did all kinds of stuff. And my daughter, we were bouncing on the trampoline yesterday, Jamie, and she's bouncing. She said, "Dad, isn't it funny how humans want what they can't have?" And I said, "What do you mean?" She goes, "Well, last year when we couldn't go anywhere, we played all the time, and now that we can go wherever we want, we just watch TV." And I was like, "Man, that's some deep stuff," because people are just back to watching TV now. It's a weird deal, man. But the last year been really impactful in the business community and on insurance. We've seen insurance rates go through the roof. The whole market hardened. Investment returns came way down, right? Because rates came way down.
Yep.
Premiums went way up. Claims went way up in certain areas. Auto got caught in a huge debacle because they gave out a bunch of refunds and then they got nailed on severity.
Yeah.
And I mean, it was just a wackadoo year in insurance. You are co-founder and CEO of Ladder. That's ladderlife.com, which is kind of reinventing term life insurance. And we're going to talk about that in a second.
Yeah.
I want to talk with you about what happened with life insurance in the last year, because life is not something, Rob and I are P&C guys. Life is not something that we really cover a lot, but I want to talk about life and how that got impacted. Before I talk about that, I want to talk
about that, because it's very different than what happened in P&C.
Yes, very different. Has to be, right? I did not see life rates materially change. I mean, so it was a very, very different deal. But let's talk about you for a second. I want to hear, where were you born and raised? I know you went to, but you went to Bowdoin College.
Yeah.
I'm sorry, Bowdoin College. I'm sorry.
Up in Maine.
But Bowdoin up in Maine. I'm so sorry. I said it wrong twice now. You went to Bowdoin. Bowdoin College up in Maine. Then you went to Harvard Yard. You went to Harvard for business school. You and I were in Cambridge at the very same time in 1999. Yeah, well, dude, summer 99. Average temperature summer 99 was like 56, 57 degrees. It was a very cool summer. And it was the first time I ever went to Fenway and sat by the Green Monster and saw just magic. And you ended with a really diverse career. But where did you grow up, and what did you think you wanted to do when you were a kid?
So, great question. I grew up outside of Boston in the western suburbs, born and raised. My whole extended family is actually originally from Maine, which is where we'd go up in the summers. And one of the summers we went up and toured Bowdoin and just fell in love. Small liberal arts school, and just. So born and raised out of Boston, we used to take the T in to Fenway Park all the time. Got to see the Celtics play in the old Garden, which was really, really, really fun. And then, I didn't quite know what I wanted to be when I grew up, right? I went to a liberal arts school and I studied philosophy and studied math and did some science. And he ended up actually starting my career on Wall Street. So graduated and went down, started my career on Wall Street, worked there for a couple of years. Came out and opened up an office in San Francisco and fell in love with San Francisco. Just loved it out here. It was a very dynamic, very, very dynamic market. And this was back a long time ago. So then left and went back to business school. So I spent 2 years back in Boston at business school and really just fell in love with technology, innovation, what was happening, and what was happening really in the digitization of finance. So my second year of grad school, I actually spent flying back and forth each week, working for a startup during my second year. Worked for a company called NextCard, where they were the first people to pioneer instant credit online for credit cards. So back where you can actually underwrite someone instantly, give them a credit card number right away, and have them start charging that moment. This is back before you had to either fill out those old paper apps you used to see, like they'd be sitting up like on store counters. You'd fill those out for credit cards. That was great. It was Sequoia Kleiner backed IPO. Had a really exciting run. And a lot of what's happening in personal line finance 25 years ago is now happening in personal line insurance today. But I did not grow up as an insurance fan, but I was a beneficiary. My dad died when I was 11. And we had a life insurance policy, and it did exactly what it's supposed to do. Kept me, my mom, my brother in our home, around our friends, and in our community during like a terrible time. So my dad couldn't affect his death, but could affect the financial impact it had on our lives. And he went out there and bought a life insurance policy. It was an act of love. Like, he didn't benefit from it, but he made sure we were really protected. And that kept us in our home, helped pay for Bowdoin, helped pay for Harvard Business School, and had a massively redeeming role in my life. When I was thinking about, what's next, I was thinking, if I can take this incredibly great product and modernize it, like, that's going to be something that I'm just going to be so excited and delighted that I could have an impact on. So that's what that's what we're working on here at Ladder. So Ladder's story is a little bit intertwined with my personal story.
Well, I mean, as almost every entrepreneur story is, right? I mean, you tend to be attracted to things that you're personally passionate about. It makes sense that you'd be passionate about this. I'm, of course, very sorry for the early loss of your father. It's so tough losing a parent that early in your life. Has a deep impact on the rest of your life, but it taught you a very valuable lesson about a financial product that literally saves families. It's a big deal. It's a really big deal to not have to worry about money when probably the primary breadwinner in the house passes away.
That was sad.
Yeah, and that's really tough. And so you saw that, and you brought a really interesting point of how early financial services was to this game of instant underwrite, instant bind. Now, again, financial and insurance are so closely intertwined. I mean, the insurance originally was just a bottomry contract. It was a loan that was forgivable if the asset was lost. Marine insurance was the first real insurance with the Babylonians, right? So it makes sense that we would mirror the financial services industry. To me, it's just surprising that it's taken so damn long to mirror them when really the 90s is when they pioneered the use of vast troves of data on individuals to underwrite the credit risk immediately, right?
Yep.
Yeah, and it's so different.
Amazing, right? I can get $1 million mortgage easier and faster than I can get a life insurance policy. Man, that's crazy. Like, that's just amazing to me, right? It's around a home. It's a complex sale. I'm in escrow. So I can do it in 5 minutes.
Yep.
But for me, for a lot of individual lines, it's just way harder. So there's a lot of reasons why, but old technology and kind of old business practices, they are hard to change. So there's a lot of smart, good people in the industry who are trying hard, but I just have the luxury of starting with a clean sheet of paper. So I don't have to change anything. I get to build from the ground up in brand new, beautiful ways that power some really unique capabilities.
So from 2000 to 2015, you were at Oak Hill and then at Aldenwood. Were you acting as a venture capitalist or growth equity, or what stage were you investing in? What type of companies were you investing in there?
Invested in a lot of early stage companies, and then also did some later stage investments. And Oak Hill actually has Texas connections, so we spent a lot of time in Fort Worth. So spent a lot of time traveling back and forth.
One of my favorite cities in Texas, and of course, home of one of my favorite Mexican restaurants, Joe T. Garcia's, over in the Fort Worth Stockyards.
Been there multiple times. Love it.
They serve two things there. Two things. Enchiladas,
but they're really good.
Enchiladas and fajitas, and that's it. That's all you're going to get. I mean, it's like, where's the menu? You don't need a menu. There's two things. I'm like, wow. So Fort Worth is awesome if you haven't been there, to our listeners in listener land. So the origin story of Ladder, certainly you had personal experience with life insurance, but what were the conditions that came together in 2015 to form Ladder?
Sure. So one of my co-founders, Jeff Merkel, we've been friends for a long time. He was leaving Google, been there for a while, had a really great run. So, he has 3 awesome boys, and was like, as he was leaving Google, was figuring out like his whole financial life. And one of the things he needed to do was get life insurance. So I'm a little bit the person a lot of friends will turn to and talk to about financial stuff. So we talked about it and told him what a great story it is, what a great product it is. And he came back to me after trying to just go buy a life insurance policy. Literally, I sent him out, go buy it. Right? He knew he needed it, wanted to buy it. And he came back. He's like, this is unbelievably hard. I got to sit through all these timeshare sales pitches. I can't just buy it. Like, why is that? So it was a really provocative question that made me sit back and actually really, really question that. So I spent a while when we first were getting started. I just spent talking to a lot of senior execs at life companies and helping trying to understand why there's not really a lot of direct consumer term life insurance. And there's a lot of structural reasons why, a lot of structures of the industry why, but we decided to go out and try to make it just instant, simple, and smart. So you can go to louderlife.com and buy a policy in 5 minutes and be done.
That's, I don't know how many of our listeners have gone through actually buying life insurance. You're filling out a 20-page questionnaire. Then they're sending someone out to your house to give you all kinds of medical exams. Then they're filling
Take your
out
blood. Yep.
Then they're talking to your doctors and doing more work to analyze. I mean, it's crazy. It's a crazy process. So how do you get away with not doing all that?
Well, part of it is just the blessings of brand new technology and starting from the ground up. In the industry, some carriers have as high as like 15 to 20% not in good order applications, right? So for us, since we're having a real-time communication with the customer, real time, either on their phone, which is actually the majority of where people do it, or online, if something is mistyped or looks incorrect, they have a chance to correct it right then. So from day one, 100% of our applications have been in good order. And then what they do is they permission us to go pull data on them, right? It's the same thing as just like them permissioning in the old world for them to go talk to your doctor, right? Which is what they do. So we go out there and we just pull all the data digitally. And what we do is as we pull it, we can make a decision instantly. So for the customer, you don't have to apply, wait 6 or 8 weeks, see what price you're actually going to get, because they quote you, and then they will give you like a binding quote, and then you can bind, and then you have to go through this whole issuance process, which by itself, in and of itself, is hugely complex and expensive to administer. So we can just do that all instantly. We can come through, you can apply, we can give you your real price. This is exactly what it's going to cost you. You can say yes, you can sign, and be done. 5 minutes, from $100,000 to $8 million, which is the high end of the kind of the term market, from 10 to 30 years. And customers just are delighted. One of the things I think I'm really proud of is our Net Promoter Score, which is kind of, will you tell your friends about us? Our NPS is 83, which is like right up there with beloved brands. The life insurance industry as a whole is 26, because they make it really kind of hard and complex for a lot of good reasons. But, our policy admin system isn't different from our agency system, isn't different from our quoting system, isn't different from our illustration system. Like, we just have one clean tech stack where we can do everything, and that allows it to be instant. And what's really cool is we have APIs, which are like ways other software programs talk to our software program. We can take our APIs and put them out into places where life insurance is really relevant to them. So we partner actually with a lot of other insurance companies, and we partner with a lot of other financial service companies where they can then offer life insurance to their customers in partnership with us. And they love it because it's persistency glue. That auto line is going to stick around a lot longer if they also have your life policy with you. And same thing for other financial products.
That's awesome. I mean, great insight. And I did go through your questionnaires as part of this, and it's also important, I think, what y'all built from a user experience perspective. You talk about your Net Promoter Scores, and certainly every tech company on the planet talks about NPS, but NPS is really driven by the user experience and how easy it is or difficult it is to use the product. And it's quite easy, which is really nice. And so I think that's something else to really consider. Rob?
Jamie, it's such a pleasure to have you on. As James mentioned, we come from more of a P&C background and angle, so I'm thrilled to have you on to kind of bring the life insurance perspective. So a lot of questions, limited amount of time. But the first thing is, I actually literally got a question. I get a question all the time. I got it again this week. I was on a webinar, and I tend to stumble through it, but you're the authority, so I kind of want to
okay, let's see.
A lot of buzz about Insurtech. Obviously, our podcast is built around that, and there's a lot of, I could go on and on, right? Telematics, IoT, blockchain, like lots of stuff. But a lot of it is in P&C. And so the question I get all the time, hey, Rob, when is this going to come to health insurance and specifically life insurance? And people kind of point to life insurance as like the last segment that they expect to be disrupted through technology. So, you've kind of given us a glimpse a little bit, certainly, compelling value proposition that you're offering at Ladder relative to the traditional industry. But maybe you can just go a little bit deeper and like, what are some of those tech opportunities? You talked about a clean sheet of paper, and you talked about not trying to, super glue and duct tape a bunch of different, disparate systems together and whatnot. But maybe you can, let us under the hood a little bit. And what were some of those key things from a tech standpoint that you had to get right in order to enable your value prop?
There's a lot, and there's a lot of complexity. I can go 1,000 different ways. I'll just give you maybe two different kind of key insights. Number one is we have one data layer, one data lake. So that allows us to have a really good NPS for our customer, because as you're going through our website, we can track very easily in the data layer, like where you're getting confused, what are you having to go back and revise. So then we can isolate that and have a conversation. It's like, do we need to revise those questions? Or people find that confusing? We can then reach out to customers and say, hey, listen, we saw that you were confused by this. How can we make this better? Data and data visibility is critical. Insurance is a data and probabilities game, right? So better data, better customer experience, you can have better underwriting results, you can go down the list, all those things. A lot of the systems we have to interact with for, let's say, pulling underwriting data are not made for real-time, instantaneous customer experience. So we will always say, hey, we give you an instant decision and we're instant. And we'll talk to a lot of data vendors like, we're instant too. I'm like, great, what do you mean? They're like, we will give you a return within 15 minutes. And I'm like, no. We're talking milliseconds. If I make someone wait more than 75 milliseconds, they get distracted, right? You can't put a spinner up there for 15 minutes. It just doesn't work. So you have to actually do a lot of really hard tech to take things that can take up to 15 minutes, feel instant and delightful, and being able to do some really cool things. So we had to work with some of those vendors too. 15 minutes, there's no amount of tech can solve that problem. But some other problems you can solve creatively. But it always comes back to the consumer. And really just talk to the end customer. What are you trying to achieve? Like, what do you need? Because this is a product. What's cool about life insurance, people say it like needs to be sold. No one understands it. It's actually, we do a lot of surveying. So if you're a friend, we ask this question indirectly because you get a better answer. If your friend has a kid, you think that they should have life insurance. What do you think the answer is? The answer is like 95% of people say, absolutely. And we go, great, what is life insurance? And they actually can properly define it. So this is not a customer education problem, right? This is not a education problem. It's an activation problem. So we got to be able to have people take what they know is right and put it into action. And that's what we've been, really working on hard at Ladder to make the technology easy.
Yeah, I love that. And I want to follow up on that because that was actually my next question about, exactly like you said, life insurance is sold, not bought. I think that we kind of we hear that all the time, right, in this industry. Yeah. And so you just kind of said, no, that's actually not the case. We talked about
I don't know a single salesman who ever thought it wasn't their great sales skill that made the product sell.
That's true. That's a good point. Yeah.
That's like asking a barber, do I need a haircut today? I've not heard many barbers be like, no, you're good.
That is very true. Very, very true. So tell me a little bit about actually, your name Ladder and this concept of laddering, how people's needs of life insurance kind of evolve over time. Because I do think that is part of the education, right? Going from term life and you just need that basic protection that your dad passing away, at a young age, being able to protect you and your family members, right, all the way to that kind of whole life and variable annuities. Like that's where it kind of gets complicated when you have some of those more investment sides to life insurance. So just tell us a little bit about laddering and what that concept is.
Sure. Well, I'll tell you about laddering and the concept, which is, before Ladder, and partly because of these policy management systems, partly because of how the policies were written, they would tell you a block of insurance, like say $1 million of insurance, and it would be static for 30 years, right? And your needs may change. You may have a second kid, those needs may go up. You may get a bigger mortgage, those needs may go up. You know what? Those kids may be through college. You may have paid off the mortgage or half the mortgage. So we designed a policy that has no policy fees, right? Because we're just administering it digitally. It doesn't cost me a lot to run my servers. So it's no fee. And you can, anytime you want, come in and press the down arrow or the up arrow, right? You press the down arrow, you cut your policy in half, your premium goes down by half that day, right? And you get rebated whatever prorated amount for the month is, right? So we wanted to put the power really at the end customer because they know how their needs are changing. We give them a lot of calculators and tools, and we can expose that also to our partners through APIs because they'll see if those mortgage balances change, if they're Rocket Mortgage, for example. And that allows customers to do this. In the old world, it was very, very difficult to build insurance ladders, and you had to build them statically, right? where you got underwritten at a point of time, and it was very, very difficult and quite expensive to do. So we just made it all digital and instant so that now you can adjust your life insurance. And for most customers, they'll save about 40% over the lifetime if they aren't over insured for periods where they don't need to be, which is great because most people are doing exactly what they're doing, right? They get a big life insurance policy to make sure their kids are taken care of, but they're paying for those kids as they go. So when they graduate, when your 11-year-old James turns, 22 and she's off on her own, has got her first job, like you don't need that life insurance policy to get her launched in life, right? Because you've already launched her.
Yeah, I agree completely. I noticed something interesting when I was going through, and again, back to the concept of laddering.
Yep.
I do CD ladders, right?
Yeah, totally.
Again, this is mirrored after another financial product. I ladder my CDs, so one's always maturing, and I'm always laddering.
Rolling maturities,
Yeah,
exactly.
I'm on rolling my maturities. I noticed when I was applying for ladder,
Mhm.
there's a question: will the coverage? By the way, you don't ask for the customer's name until way later in the process, which I found really interesting. That you don't get into personal information until much later in the application. And it said, will the coverage applied for replace or change any existing life insurance or annuity contract? And if you say yes, it literally stops you and doesn't let you proceed. It said ladder is not here to replace insurance. It said, the specific message was ladder is not available as replacement insurance. So you are here to truly stack insurance on top of whatever product that they currently have.
Yeah. We're not in the business of trying to rip out what you have and resell it. There's a lot of technical issues around it. To really put the customer at the center, like you got to know what they have and how much and everything else. So we just listen, if that's what you need, we're probably not the best place for you. But if you're looking to grow, we're it for you. So, but I think at some point we may be doing some more of that. This is just day one for us. So we're going to try to bring our innovation to every one of the insurance lines in life insurance.
It's interesting to me. Walk me through again the tech of this, because in the home insurance business, we're seeing rapid underwriting because the public databases are so good. But there is no, despite all the efforts from 2008 and Obamacare to create central health records, there is no such concept as a central health record for an individual. Doesn't exist. The closest thing to it is your record in the nearest hospital that uses Epic, because Epic is so pervasive. Yeah, exactly. Yeah. And so there is no common centralization of the medical record system. In fact, most medical records are still faxed because they falsely believe that somehow they're more secure faxing, even though all the faxes end up going to email, which is hilarious. Walk me through how you're pulling everybody's medical records and making what's your fraud? What is your fraud mitigation? What technology are you using to mitigate fraud on this, versus the average life insurer?
So let's get Insurtech geeky. Fraud and underwriting are actually two different vectors. So first, what I'm trying to do is understand, are you trying to pick me off, trying to lie to me, trying to falsify your information? That fraud vector is different than what I think your underlying impairment or risk is, right? So we build our own both fraud and underwriting models that can help you understand fraud. Now, we have, thankfully, industry-leading claims rates and very, very, very low levels of fraud, partly designed because of the product design. Someone's got to die to claim here, right? You got to be pretty committed to fraud. But people can underrepresent and do other things. So we spend a lot of time on our technology trying to make sure that people are really being truthful. And you can do a lot of that through consumer design, right? Through a little bit of behavioral economics, how you ask the questions, how you prompt it, right? How you talk about this to people. Because the vast majority want to just get a life insurance policy and want to make sure it pays. So we talk to them about who are your beneficiaries? What are the relationships with them you have with them? And that really prompts people to be much more truthful. So, but we do have to build some different fraud models. It's on a different vector than how we do some of our underwriting models. And our underwriting models, there's a bunch of different FCRA, which is a type of data, FCRA qualified medical databases, where consumers will sign consent and say, I'd rather you check those than go get a fax from my doctor. So we'll go then and check those and make sure that it aligns with what people are saying. And since we are doing this in real time, if we see something that's different, we can ask them, hey, this is different. And sometimes they're like, oh, yeah, I forgot about that. I forgot I had a sinus infection and whatever. Right. And you're like, oh, okay, it was sinus infection. No big deal. Great.
So we only have 6 minutes left, but I do want to talk about customer acquisition costs.
Sure.
Because CAC eats so many new companies up because if CAC exceeds LTV, you're hosed, right? I mean, if it gets anywhere close to exceeding LTV, you're hosed. I mean, you got to make money at some point on every account.
And cash payback. If LTV takes you a long time, you can run out of cash before you collect all your premium. So
correct.
So you got to manage both cash and, because that's the only reason you go bankrupt is you run out of cash. You got to both cash and LTV to CAC.
Yeah, and you are talking.
We measure that stuff religiously.
And you're talking to a militant, bootstrapped entrepreneur. So I started JB Knowledge. We're a 240 employee company. We started with $5,000 in my dorm room 20 years ago. So it's
that's awesome.
So we never took outside capital. So in my company, cash is king, cash is king, and cash is king. It's challenging, and of course we're services and products, and spinning up a product company without outside capital is very challenging.
Oh my gosh.
Yeah, it just
so
took
cash. I didn't realize I was talking to someone who's.
Yeah, I know cash 6 ways to Sunday because I had to finance all of our product development. And of course, the beautiful thing when you exit, which we did in 2018, we sold one of our products. It's a wonderful event because there's no investors at the table with you, but it also means that it's very scary along the way. And CAC can be really scary. I spent some time Googling life insurance, just buy life insurance. Purchase life insurance, buy life insurance online now. In my searches, and of course, Google's very deterministic about how it shows ads. I didn't see any ads for Ladder in the mix. I saw, and I just give you who my top results were on a regular basis when searching: Geico, Prudential, NerdWallet, Policy Genius, Money Under 30, State Farm, Allstate, Investopedia, and Forbes. That's your first page results. You're in the mix with some of the biggest companies and biggest websites in the world. How are you getting people to find out? Obviously, other than going on some phenomenal podcasts like the Insurtech Geek.
Exactly.
How are you getting the masses? Because you sell personal lines. How are you getting the masses to buy insurance without getting blown out of the water on your Google ad budget?
Oh, listen, this is great. I said what part of our competitive advantage is our data lake. It's our data lake. Like, we measure everything super closely. So buy life insurance now. You have two problems with it. It's a really expensive click, doesn't convert very well, and actually the risk is terrible. So you actually get hit really hard on both sides. Some of those other people who are advertising there, they're not measuring it the same way we are, right? We're measuring it in a very specific, precise way. We're looking for getting great customers who underwrite well and say yes to policies and stick around, right? Because that drives your LTV. And then you just got to measure that and balance that against your CAC. So we advertise probably every single direct measurable performance way you can advertise. And, we're pretty relentless about it because that is part of our business. But, a lot of people who are just agencies are just looking for leads, right? And they don't have visibility into risk quality. They don't have visibility into, do we think there's an underwriting profit here or not? Because they're getting paid just the same percent premium regardless. So not only do they have not visibility into it, they're actually actively disincented to look at that by the carriers. They say, don't worry about that. I got that. You just, whatever you got, as long as I say yes, this is like the fixed rate you get, right? So our advantage is we have an integrated view. So some people are going to find really attractive business if they're an agency only, we don't like. Some things we find very, very attractive, other agencies would be like, oh, we don't like that. Right? For all different types of reasons, whether it's risk margin or other things. So it's because we're looking and doing things really differently. And again, we can cause people to take action. And the single biggest thing that's going to affect your CAC is your funnel efficiency. And I will tell you, if I can take you through, have you say yes and bind in 5 minutes, my funnel is going to be more efficient than yours.
Yeah, absolutely. And that's kind of what I wanted to understand is it's daunting, I think, looking at anything in personal lines and trying to edge in on all the heavies that are there dumping billions of dollars in ad budgets. And of course, Rob talks about this at length in his book about the cost of acquiring customers and insurance. But it's daunting. Rob, take us home. What's your last question?
Yeah, so I love it. I'm nodding vigorously. Jamie is, lifelong underwriter and always wondering, what are those marketing guys doing? Why are they sending me all this crap? Right. So I appreciate that those two sides of the organization don't always communicate and don't always talk, and it very much should be a hand in glove fit. So very quickly, because I know we are running up against the time, just to kind of follow up on this distribution thread. You mentioned the API. Yeah. You've got information on Ladder for advisors, affiliates, and Ladder at Work programs. So maybe you can just give us a very high-level overview of some of those distribution channels and how they work.
Absolutely. So our goal is wherever you're thinking about your personal or financial life, we want to be there. And we want to be there if it's relevant for having a life insurance conversation. We can go out and have that conversation either directly through an ad, Google or Facebook, or we can do it through a partner. So we partner with financial institutions like a SoFi, where you're there managing your financial life. We work with a lot of fee-only advisors, really love working with us because as they engage with their customer over time and see that their financial needs change, they can easily, through our API or through our web portal, see, hey, does the customer have a life insurance policy in force with Ladder? What's the next premium amount? What's the current face amount? And they can actually pull that into some of their planning software. So while a lot of traditional companies, they don't expose APIs into planning software companies, we're very happy to do that. Because what we're trying to do is, again, if an advisor has a great trust relationship, that's awesome. We want that to be used for the customer. We want to be everywhere that is, because we're just trying to really redeem this product, modernize it, and make it really instant, simple, and smart for people to use.
Yeah, that's awesome. So it's been a pleasure having you on, Jamie. Really appreciate being able to talk life insurance with you.
Hey, thanks, guys. Thanks, Rob. Thanks, James. Sorry the bluebells aren't out. They are flowering up, and we got some great mustard flowering up in Sonoma, right?
Sonoma. I've done many trips to Napa, and it was killer through COVID not to be able to go up and enjoy the wine country and hang out up there. It's Sonoma and Napa are just one of my favorite places on the planet. I have a set of clothing I really only wear there. It's like my wine tasting uniform.
Wow.
And
it just they're showing it out, James. I can't wait to see the uniform.
I love it, man. I just love
it. Chapeau, or is it
no chapeau. It's just it's all linen, and I got all this stuff, and I just kind of traipse around in a wine.
They allow you to own linen in Texas?
In a wine-induced fog, it's like I have this stupid smile plastered onto my face the entire time I'm there because it's just so ridiculously nice. But a lot of joy. What a great place, and what a great guy, man. Jamie, thank you for being on. I appreciate it. Maniacs are people too, and that's what. If you don't know, if it's someone from Maine, I learned that when I lived in Boston. They would say, "I'm a maniac. I'm from Maine," and it always tripped me out. My most fun time I ever had in Maine, I did a clam bake on the beach in Maine.
Good living.
Oh, that was good living. That is good living.
It's like barbecue in Texas. It is good living.
It's good as long as it's in the summer. It's good living. So, so thank you for being on the day, and Rob, as always, thank you for
absolutely, James. Great to be with you.
And in listener land, thank you out there for joining us for this episode of the Insurtech Geek Podcast, powered by JB Knowledge, JBKnowledge.com. It's all about tech that's transforming and disrupting the insurance world. I've been your host, James Benham, JamesBenham.com, with co-host Rob Galbraith, endofinsurance.com. Big thanks to Jim Greenley, our podcast producer, Kara Dalton, our creative producer, and thank you for joining us today. We're taking you on a journey through insurance tech. So enjoy the ride and geek out. Talk to you next week.